Welcome to Financial Education Ranger. Today I'm going to talk about a few stocks related to long-distance healthcare stock. Do they have growth potential? First of all, how do you know a company is too big? Let's try to imagine McDonald's or Coca-Cola doubling and doubling. If a company owns just 1% of a market, it has a lot of room to double and keep on doubling, especially if the market is growing too. If the company already has 70% of the market, all that it can grab is the other 30% of the market, which is unlikely. If a company has most of the market because it just invents the market and the market is hardly penetrated, that's good. It has plenty of room to grow. Think about Apple, the first iPod and iPhone. If it's an old market and is saturated, that's different story. Long-distance healthcare is a new industry, as most of you still need to visit doctor physically. But it is going to change in the future. By the way, please like, share, subscribe, and press the notification button. The market is getting volatile recently. Many stocks like GameStop, AMC, EXPR BlackBerry was a few 100%. The transaction volume of AMC was over 30 billion, even more than Tesla. This was not just done by retail investors. It should be hedge funds working together to force those stock rise and cause the short squeeze. Last Friday, over 80% of the stock declined. Those market leaders like solar stocks have been declined as well. The second thing is, even though some of the companies beat the analyst earning estimate, but the stock still dropped. This is not a good sign too. The VIX index increased sharply. US dollar index also increased. In addition, the market has been on strong uptrend for quite a while. It is due for a pullback. Today, those Wall Street-backed stocks declined. The market seemed to be more stable. Let's see what happened tomorrow. If market rise, increase a bit of your exposure. Otherwise, sell in strength. Okay, the first stock I'm going to talk about is Clover Health, symbol CLOV. Although the medical insurance market in US is huge, easy to make money, the company came to use big data and machine learning to evaluate risk. But this is what other insurance companies doing. It seems not special. However, they have something that other companies do not have. Clover Health is a medical plus insurance company. It lets those people who join medical care in US who have different insurance choice. It provides a free long-distance medical platform called Clover Assistant. The Clover Assistant is designed by doctors for doctors to help enhance patient care online and reduce administrative burden. The Clover Assistant can synthesize and analyze each patient information and make real-time, personalized, dynamic, evidence-based recommendations right at the point of care. At the end, patients will pay less, and the cost of premium will be lower. The doctor can earn more, so this benefits three parties. And this moment, Clover operates in 7 states. The US have 50 states, so there is still a lot of growth. It has 460 million revenue in 2019, 500 million revenue in the first 3 quarters in 2020, 46% increased growth versus first 3 quarters in 2019. Its estimates for 2021 is 870 million. Member will increase 30%. After IPO, it has 1.2 billion cash. Right now, it is losing 10 million in the first 3 quarters of 2020. If more people use it, the path toward positive earnings will be achieved very soon. You guys can wait for the stocks pull back to $13.2 and get in. The next stock is First Life Healthcare, symbol ONEM. Membership count in the quarter surpassed the 500,000. Quarter 3 membership growth accelerated to 29% year-over-year, with momentum across both consumer and enterprise channels. They reached year-end membership guidance a quarter earlier. ONEM also surpassed 100 million in net revenue for the first time in a single quarter, delivering $102 million in total net revenue in quarter 3, which grew 46% year-over-year. It delivered a cash margin of 42.9 million, or 42% of net revenue, and positive adjusted EBITDA of 3.5 million. The margin results demonstrate the strong leverage components of the model. First Life allows operating in 12 markets across the United States, increased 50% over the last 18 months. Throughout 2020, it has expanded into new markets in partnership with both new and existing health network partners. By the end of 2021, it planned to have established physical presence in 17 markets, a 46% from 12 markets today, and more than double the markets from where it was 18 months ago. Today the stock is back out. It is a buy. The first stock is Teladoc, symbol TDOC. It is a world leader in virtual care. Teladoc Health directly delivers millions of medical visits across 175 countries each year through the Teladoc Health Medical Group, and enables millions of patients and provider touchpoints for thousands of hospitals, healthcare systems, and physician practice globally. 90% of the revenue come from US. Year-over-year, quarter 3 revenue grows 109% to 288.8 million. Total visit increased 206% to 2.8 million. Year-over-year 9 months revenue grows 79% to $710 million. And total visit increased 163% to 7.6 million. The gross margin is 64%. TDOC is performing really good. Today the stock hold quite well. Can add a bit here. If possible, get some share at $253. Remember, there is always risk in the market. Be careful. You are responsible for your own reinvestment. Please like, share, press the notification bell, and subscribe to this channel. See you next time.